Have we just witnessed Wall Street setting the trap? It turns out that CTAs have started purchasing back into markets, and we just saw a new low for the NASDAQ. So in today's video, we'll discuss why the broad market is actually improving and whether we need a VIX 20 to be reached before we can really consider this a turning point. There's so much going on and some absolutely amazing levels that were reached over the last 24 hours. So join us as we cover stocks, commodities, and cryptos together right now. Well, welcome back everybody to The Daily Show. My name's Tom. Today we're discussing everything from the macro to the data to everything we need to know. And boy, oh boy, is there some big data. CTAs started to purchase back into the markets. Dark pool activity is on the rise. And of course, options markets are ruling the roost. Energy, healthcare, banks, big green sectors over the last 24 hours, while as semiconductors continue to struggle. But it does look like Wall Street might be snipping them up. And we'll talk about that a little bit later on. Remember, if it's your first time here, welcome to the community. Subscribe and smash that bell icon if you love everything to do with markets like we do. So let's get into the first point here. And this is to do with oversold indicators and whether we've seen the peak of maximum fear. Now, you'll notice here macro charts report, which we've focused on a few times here over on X. Basically, you can see that it's now getting closer to the oversold. And I would say if this was updated, because it's about 24 to 48 hours old now, we are most likely in the oversold metric. Now, when we've hit those in the past, we've been close to lows. And remember, we have a base case scenario of 5,300 to 5,350, which is basically a weekly 20 moving average at the 5,300 and a few other reasons that really would be in line with what we expect based on the statistics and the data that we've been presenting now for well over a month. Also, it lines up well with this that we posted over on X. Follow FX Evolution, links and comment down below, where you can see here that the sentiment, according to Goldman Sachs, has just reached maximum fear. We had this back in April and it marked the low. And it also was the point that we hit back in October of 2023, again marking the low point or close to the low point. So this becomes very interesting when we take a look at the VIX. Remember, we do expect that volatility will continue to be very high between August, September, October into November. And as you're about to find out, and we all are together on the data right now, you would be surprised how often we tend to see VIX highs in August and actually October. Have a look at this stat here from Seth Golden over on X, and you'll notice that we never see a peaking of the VIX in July, but we often see it in August and October. Now, of course, things can change, and this is only since 1990, but I thought it was interesting to note that they were all stacked together. 5 events in August, 5 events in October, only 2 in September, which is considered one of the worst months of the year. And November and December didn't tend to bring too many overall VIX highs. We did see December, though, giving us tons of VIX lows. So it usually is more of a calm month, which why it gets that kind of Santa Claus rally kind of ends up Thanksgiving into Santa Claus rally run. Now, let's also talk about rate cuts because, of course, a lot of people have been discussing those. We've brought up many different stats around this to really show that just because we're getting a rate cut doesn't mean the market's going to crash straight away or anything. This is another one here from Seth Golden. Basically, it shows you that after a rate cut, sometimes we can go a little bit negative, you'll notice over here, but as you go through, it does tend to favor the bulls a little bit more. The one caveat to this is I would say that when you are yield uninverted after being inverted for so long, that's the real worry. So it's not so much the initial rate cut, it's when you get a rate cut and you've seen bond markets invert the yields, basically that's when you want to be really concerned. So that means that the short-term yield is above the long-term yield, signaling that there is probably a recession somewhere on the horizon. Now, most people are ignoring that indicator right now, and I believe, and I think we all do together, that everyone will be ignoring it, especially when it uninverts and doesn't do anything to the market in maybe 3, 6, or even 9 months. That's when you'll want to be most fearful of this market. We'll talk more about that through the upcoming videos and shows that we're doing here on YouTube together. And of course, subscribe if you're interested in that content. But let's talk about Microsoft, my favorite stock in, of course, the market. One of the 3 pillars, Microsoft, Google, and Nvidia, 3 top stocks that have been doing incredibly well, though, of course, Nvidia not so well in recent times, and we'll talk about that. Revenue was up pretty big, and if you want to pause the video here, you can see a bit of a rundown here from the earnings nugget, which basically shows you that revenue was up big Commercial bookings is increasing. The Azure revenue is increasing. In fact, they couldn't even really keep up with it. They're probably going to have to buy a bunch of Nvidia chips and things like that as well, which has led to Nvidia rallying, plus AMD's earnings, as you'll see in a minute, led to Nvidia rallying after hours, which has completely switched the landscape here, by the way. And overall, it was pretty good. Now, some of their forward guidance was saying it would take longer for AI to come on board in terms of start making it profitable. And I've argued this for a while. I mean, basically, we're in an AI bubble. We know that the AI bubble probably does continue as people get hyped about things. But in general, is AI the future? Yes, but we're still in the fledgling stages of it. Think of it as like the beginning of the internet. The hardware companies tend to do the best and the first adopters that can implement it and make profit from it straight away. But then people will start to realize, oh, maybe it's not so good. You could even argue that's where we're at right now, though I still don't think we're quite there. Let's take a look at AMD. Now, this one was hitting significant lows on the charts. Revenue was up 9% year over year, 5.8 billion. But the interesting factor here had to be from the fact of the matter is that they raised their full year 2024 data center GPU revenue forecast to over 4.5 billion. The market liked this and it pushed Nvidia up as well. Pause the video here if you want to read some of those other dot points. Then we had Starbucks, which also reported a little bit better than overall the market was expecting. Now, global comparable store sales were down 3%, revenue was up 1%. Obviously, the stock has been getting absolutely destroyed. Although, as we've talked about in recent times in our private community, we were starting to get very bullish on it the other day based on the structure. So the structure on the markets was actually looking a lot better into this earnings announcement, and it did okay in after hours trade. I think up a few percent, while Microsoft was down about 3 and AMD was up like 7 or something like that. Key macro events to watch out for this week. Please be aware of these ones, guys. We have to be. FOMC rate decision, no change expected. Then they'll be talking as well after that. So, of course, you've got the press conference and the report. And then the big one's going to be the non-farm payrolls, which will show you whether, really, or show all of us whether we're going to be getting a weakness in the economy and the jobs numbers. The GDP suggests that's probably not there, but we'll find out. Now, we'll discuss this idea as well. Will the markets continue to do well into the run for the election? Now, basically, you tend to see a few periods of the time where you can see weakness. This back end of July is quite common, and also the September-October period is quite common, with generally speaking, August actually being a positive month. So this is the real question mark. Are we going to see like a double dip this year where we go bullish after maybe seeing a little bit of vol, July into August, then we go bullish, then we see a secondary pullback in September, October? I'm interested in your opinions. Let us know in the comments down below, and I'll post a few of those in our next video and highlight them so we can see what the general consensus is out there. Do you think we're going to see a double dip? Are we going to see 2 pullbacks? Is this the lowest we're going, or are we going much lower now? The reason we can bring this in as well is because summer rallies are common in election years, and that's usually where we have those June, July runs, which we did. Weakness in the back end of July, that's why it's the weakest month overall, and then powerhouse in August into September and October weakness. Now remember, the VIX tends to find the highest points in October and August. So some of the Augusts have been very volatile in recent years, and we'll bring that up in our next video as we head into that particular month. But let's talk about the good news as well in terms of the overall stats. Now, we saw the market go, of course, so negative so quickly over the last couple of weeks. It pushed us from being 5% above the 50-day moving average all the way to underneath it. Now, when we saw these types of metrics, it gave us some interesting stats. And what that told us is that if you are someone that's looking at a few months, maybe even 6 months, then you would have to be a little bit more positive on the markets. Not exactly no reads here, a couple of more recent reads, and they tended to be quite positive overall. I noticed, though, that the last 2 reads we had, which was one from 2018 and one from 2000, both had 2 months later still being down. Now, that's interesting because, of course, we got these in July, and we've just been talking about September and October possibly having another secondary dip in them. If we do recover here, that's where you've got that kind of problem. So we could be seeing a pull up here in the markets, which will explain some of the key levels, particularly the NASDAQ will probably hold the key here. And then we might be seeing a little bit of a pullback into renewed strength. Either way, the bulls should be pretty favorable on this. Remember, this is the most bullish bear sell we've had in years. we've got a market that is going up in the RSP, the equal weight. We've got a market that's going up in the Russell. We've got a market that's going up in the Dow. Yet because the big tech is selling off and readjusting its pricing, then we are getting overall negative looks on the NASDAQ and the S&P. This is also kind of brought up here when we see massive selling on the RSI in terms of the Qs going from super overbought to oversold quickly. And when that happens, again, if you think about it, 2 months later, a little bit less in terms of the stats. But when we go 6 months later, very bullish overall. Because it really all plays into that idea that maybe we'll actually have an okay August, then maybe a poor September, October. What about the Russell 2000? Well, it's on track to be following what it's kind of been doing here. Since the low of last year, we've kind of tracked a little bit under. We've started to play catch up. And remember, some of the Russell's greatest earnings tend to be in this last third of the run. So when we project it out to all the previous ones here, which are all the most recent ones, you'll notice that it ends up doing quite well. And we'll look at the Russell a little bit later on the charts, but it is starting to look quite good. So let's take a look at the S&P 500 companies reporting earnings surprise. 5-year average has been really on target, especially over the last couple of years indeed. And you'll notice here that we used to only have something like 50 to 60% in the 90s in terms of overall beats. Nowadays, we seem to have somewhere around 75 to even 78% beats for most of the start of earnings season. Why is that? Well, it's a bit of, I think, cooking of the books when it comes to expectations. And I've seen a lot of your comments down below. A lot of guys, you are seeing that and you're actually starting to not believe it. Well, yeah, you shouldn't really believe beats or misses. Instead, look at the price action, look at the way the market sentiment's coming in, and think about if you were to track liquidity, how would you do it in a really good way? It's something I teach in one of our courses, and in particular, earnings season is actually best traded after the fact. In fact, you make more money there unless you're an options credit seller. Microsoft, AMD are now out of the way. Meta, of course, is next on Wednesday, and Thursday we've got Apple, Amazon, and Intel. So it's still plenty of big stocks, and we've got some of the big energy companies, Exxon and Chevron as well, on Friday. So earnings season is certainly not over. These are some of the expected options moves that we've gone through several times. ARM is going to be very volatile, but let's talk about these dark pool liquidity trades. We saw the other day that SOX put in a big trade. Now, this is, of course, a 3x bear fund. I would have thought this was actually someone taking profit, and we've made our way back up to this level. Now, interestingly enough, this still to me looks like someone's taken profit. We know that the SOX funds have been getting a lot of purchasing on them. So basically, semiconductor funds have started to see huge volumes trade through. And it suggests to me that while this could be a shakeout of retail traders, big players are still purchasing semis at these lows. So Nvidia anywhere under 110 seems to be getting purchased. Although we'll look at the charts because it could be that we're actually going towards 95, which would be an exceptionally good zone that we kind of only fantasized about only a week ago, thinking that we could get to those levels. We thought 110, 109 was probably going to find a little bit more buy pressure. Anyway, let's go over here to the Whaley Breadth Thrust. This is one of the most bullish indicators along with the 70. Again, you do tend to see that first 2-3 weeks of weakness, which we did see. This one doesn't really bring with it the weakness that we would expect in September and October at this stage. But do remember, if you're a longer-term hodler, someone that wants to be looking at a 3-6 month run, you cannot go past the Whaley Breadth Thrust or this chart here, which both suggest that basically market pullbacks should be met with bull demand. You might say, well, this time's different. I don't really think it is different. If anything, central banks around the world are trying to do more and more and more to support the Ponzi scheme that we often are trading in. And yes, it is a Ponzi scheme because realistically, most of the earnings of the market, as we've dictated and talked about many, many times here on the channel, we've talked about the idea that really most of the earnings of Wall Street over the last couple of years have been due to buybacks. Buybacks have been driving these biggest tech stocks up. And as long as they're still there, as long as we've still got this overall accommodative Federal Reserve and central bank theory, until something really explodes, it's very difficult for us to sell off more than a corrective style phase. Let's have a look at the underlying market sectors. Semiconductors down, technology down. Of course, people complaining about earnings, etc. I think that's short-lived. You watch them get hyped after that point. And then we've got XLF, XLE. Great to see energy coming out. We've suspected this for a few days now. And of course, KRE, home builders, and gold. A lot of the sectors we've been loving. So all of those doing well. Interesting to see healthcare starting to bring out a positive and that's now got a 5-day rotation of 1% in it. So again, ITB, XLE, XLU, these aren't all defensive sectors. Some of them are, some of them aren't. And semis are down 10. So if you're a fan of semis, you're starting to get into some very good territory for the BTD kind of movement. We'll go through that in a moment. Let's talk about S&P. Our worst case scenario, of course, sitting around 5,300 at the moment in terms of what we thought. Why? Well, that was the last length of move. But as we've seen before, the Qs are actually down more than that. Let's have a look at the SPX though and how it traded. So in the previous video, we talked about 54.30 being a monster put wall, and the market was unable to hold below that point. 54.30 was hit. It was rejected by the end of the day, and it closed at 54.36. So for now, it looks like it's being pressured up. And of course, this is a coil. So the market at the moment is trapped within this zone between 5,400 and 5,500. And if it does break to the upside, then of course gap fills could be in order. And if it breaks towards the downside, I would suspect it's going towards 5,280, 5,300. That seems like the most logical new one. Now, who won? Well, I guess the bears won for the session, pulling out a red candle. But in after hours trade, after we saw AMD do okay, Nvidia and semiconductors started to rally. And you'll notice again, if we look here at the US 500, it looks kind of double bottomy. Of course, breaching 55.10 is going to be the most important. And we held that major put zone of 54.30 that we put on the previous video. Let's take a look at the options though for the next session. And there are puts, and they are some serious amounts of puts. Take a look at this. It's a red storm. And there are so many puts here. It is in negative gamma situation. If the market cannot rally, well, it's going to create a cascade waterfall effect. And look where it ends. 5,300 is where the puts end. So basically, this would need hedging from Wall Street. So the next session, the 31st of July, is incredibly negative across the board. And if the markets can't rally it through and get it above this zone, then some hedging will need to occur, you would think, in the back half of the day. I doubt Wall Street's got all of that hedged off. You also notice that we've got a bunch of 5,400s as well, or 5,390s, when it comes to the next session as well, the 1st of August. So we're in a negative gamma situation. Anything can happen. We'll look at the TA, but if we go back here to the charts, just remember it's these key levels that are broken that are going to give us that next kind of movement. Remember, this is a coiling movement at the moment, and I'm actually liking the NASDAQ as the best chart, which we'll look at later on today's video. S&P 500 also said, and I showed you this, I talked about at the start, CTAs, commodity trade advisors, were buying. They were actually buying into the market on the previous dips. So they've started going in the momentum side of buying. You can see here both the NASDAQ and the S&P were purchasing up. Brent still hasn't seen a purchase, although I think it might have had one over the last 24 hours because, of course, these are delayed charts. And gold has continued to sell off, even though the market's actually found buying pressure. Same thing with silver. We saw some weakness there as well. Let's take a look at Tesla. 235 was too much for it. It got there early in the session, then sold back off. And we're still kind of in limbo land for Tesla. It has got an island reversal on it, which we'll look at later on. I still feel like this thing could go back down to 200, 210. So yeah, I'm kind of stuck on it until we get past 235, or we go down to that 210 kind of range, which is a 61.8 fib. But that's, of course, something we'll be looking at. Copper, you'll notice here again, CTA is continuing to dump, but I think that might have changed. Now let's move over to Nvidia, because this is the one that everyone wants to know. What is going on with Nvidia? This thing just smashed through the 110. Where do we go to next? Well, a bunch of puts have been closed off here, and 100 has become the new major level. Now, 103.7 is where it closed at. 95 is an exceptionally good zone for buyers. I'm not even sure we can still get there just yet. 95 is an exceptional zone though. And what this seems to be to me is that it's going to bounce off that AMD news. Semiconductors are all going to bounce off the AMD news. And the main reason is because they're going to like what they saw. You know, an increase from AMD, well, that means earnings aren't that bad. Let's push the market up. Oh, it's going to be okay. So yeah, from now, $100 seems to be the base case for, of course, Nvidia. If it gets underneath that, 95 on the charts, which we'll look at soon. Not too much evidence on the options market. Let's move over to VIX, and you'll notice here we still are not at 20. You'd think the VIX would have been higher, but it wasn't. So 17.68. XHB, home builders still doing well, guys. KRE still doing well. Overall, our bond indicators still holding up. So this is showing us that this pullback is not a broad-based sell everything and be scared kind of drop. It is still an underlying healthy market, at least according to the money flow. Treasuries also continuing to hold up and kind of patter around. I don't think it's a great trade, but for an investor, this is still a decent price range for treasuries. Of course, we've loved 90, a little bit more, but the upside is possibly 110 if you're looking at a 12 to 18 month run. Let's go into some of the metals. Loving what I saw here on copper. Didn't quite take the low. It's super oversold. Remember, in the previous session, we talked about 10 of the last 11 sessions were pretty much negative across the board in the futures market. And we're starting to put pressure on that 4.17 zone. So if we go down to a 2 hour, this is going to be a very important level. I'm actually going to go a little higher here. So it's 4.19. If the market is able to breach back above that zone, I think it might be showing us that it's oversold. It's got to get at least mean reversion or pull back to the daily 20 or something like that. This is a very significant low point for copper. It's super oversold, and I'll be watching it closely. Great rejection though. For some people, as we've said before, this is always going to be that zone where people are going to put a little bit in, try to buy it through, and put stop losses below here. But I do think the stop loss will need to be below there. I guess over the last 24 hours, you've got a little bit more evidence it could be here. Let's see if that's across the board. US dollar starting to weaken off. That's, of course, strengthening copper as well. Little shooting star here. Again, the major sell zone under that 103.80 if that happens. Very negative on the dollar, in my opinion. Let's move over to gold. Doing well. Bull swing zone in order here. As we've suspected, the bull buyers have come through on the smaller time frames. This was a very repeatable setup. It's actually one from our day trading masterclass. And right now, that's up to about 2-to-1 ratio. Very repeatable setup, guys. This one is excellent. So yeah, the market is obviously rallying here. I would suspect it kind of puts pressure on the 2,425. And then if it breaches through, swing traders will pick up lows as well. And look, we've continued to be bullish on gold for good reason. I believe it's a winner in so many of the scenarios that could happen in markets. Silver, yeah, not bad. It's actually found buyers here, and it's also moving up. For me, I'm not really super bullish on silver until we get a close above the 29.50 zone. I think that will be a big deal. But remember the silver gold ratio we've discussed for some time. That's actually back on the trend line. So for someone that's really liking silver, in particular silver stocks, which things like AG and stuff, they are at pivotal zones of turn. And remember, we expect silver ratio should be against gold at 0.15. So really, it's nowhere near expensive enough just yet. And you'll notice here on AG, so First Majestic, it's starting to get towards that 630, which I've got alerts for as well. So silver stocks, maybe there's a turn here. Gold, maybe there's a turn here. The US dollar, that was a pretty weak candle over the last 24 hours. What about oil? Well, very important bull zone. Holds for now, oversold metrics on it. Everything you kind of think you're going to want here does come in. Almost day trade worthy, actually. First time in a while, we've actually possibly got a zone here to be buying off oil. Maybe a 76 kind of 10. That should kind of instigate a smaller time frame. Bull pressure back onto oil. Of course, you're going to have to be problematic with all of these zones. No swing trade until 79, in my opinion. But yeah, oil finding pressure right where we expect it. And this is the importance of our zones. You might say, well, Tom, it's off by a little bit of barrel. But remember, these zones are fairly replicable. And what you're looking for is you're looking for a patience reaction off those. Not necessarily, you're making a prediction to a degree of a level that you're interested in. But if you don't see a reaction from Wall Street, the algorithms, the bots, the AI, whatever you want to say, basically them purchasing in or selling on that position, then you shouldn't really be doing much with it. Energy stocks, again, the replication kind of setup here is playing out so far. Like to see a new high on energy stocks. Obviously, I'd like to see oil start to improve as well to support this position. This has been going better while the market's been selling off. And on top of that, it's also been going better while energy, US oil, has actually been dropping. So again, just shows you TA and money flow is quite big. And I've noticed a few people now are picking up on the energy position because it's starting to trend through X. It's starting to trend through YouTube and some of the other places on the internet. Let's move over to 700, which is our kind of read here for the Chinese market. It is improving. It had a great session in it, which is Tencent, one of the best stocks in the market there. So we're looking for that to improve. And you'll notice HSI finding some bullish pressure. Still not out of the horror show that it's been in terms of pullback, I'm still confident in it when you're looking at it from a multi-month, so it still looks all right. UK 100 still looks good, still looks bullish on the charts, guys, and a nice kind of range-bound market here, which hopefully is bulling through. Now, a few people have said, oh, what's the best price to buy it at? Look, you can scale in here. You can also look at it at 8,200, but in general, this is a very big switcheroonie, and that usually means a new all-time high is coming for the UK 100. Let's move over to Nvidia. Now, this is a shocking chart, there's no doubt. It comes down, it hits what I thought was an exceptional level. We actually posted over on X as this is the first little tasty bit for Nvidia. We saw that bounce coming off, which was completely correct. Then it's dropped back down, and 95, you'll notice, is a gap fill and starting to get into significant role reversal zone. So this would be a huge level, 95. That would also mark, I think, around a 30% or 40% correction. So yeah, it would be 30%, 31, 32% connection. So that would be a huge correction. We've got some gap fills that we've left behind as well on this particular chart. So certainly could play into the 122, but I would expect this to be green on the next open because, of course, it's going to rally off AMD. Let's have a look at AMD while we're looking at Nvidia, and then we'll look at semiconductors. This was a pretty interesting trade. It was low and it went underneath. I had it all marked. Certainly, it could have been like a YOLO technique if you want to go bullish. The only reason is sentiment was so negative coming into the earnings. That was the main reason. And 145. Now that we're probably going to open and stick that in the next session. So let's have a look here at what plus 8% is off the close. Yeah, so that's like up here somewhere. We're starting to get above the most traded zone soon as well. So this is pointing towards maybe AMD might begin as a catalyst here to push everything else up. Very interesting point here for AMD. Certainly want to see it above 158 to really start proving that fact as well. Semiconductor ETF down and down, 61.8 fib, no bid. Resistance becomes support, possibilities here. No bid though, so I would expect bid over the next 24 hours. We can now mark out these highs as well, such as 245.67. We want to see the V. We want to see some bidders come back in and show a green candle. This has been red all the way, but this is a pretty good level for semiconductors, 61.8 fib, nothing wrong with that. Tesla, as we mentioned, it is an island reversal. It did move up, had a bit of a strong sell-off in the previous session. Stops would be holding. I don't really like this one as much as others, and I've mentioned why. It's not with other things. It's just like an island reversal in the middle of nowhere off some news. So we'll see whether it can hold, but stops would have to be below the low. I still think it could go 210-ish on that stock. What about the Russell? Well, the Russell looks great. I mean, it's continued to find strength. It's continued to keep higher highs. It's continued to look like it's going to go to 2430. And the RSP also putting in a couple of green dojis, trying to get above. So that's marking good things for, of course, the Russell 2000. Now, we mentioned the NASDAQ being the best before. That's because it got so close to our major bull zone, and it just missed it by like 20 points or something. And then it's rebounded thanks to the AMD earnings and people getting hyped back on semis. Semis has pushed this back up. Now we really do battle with the 19,230. If the market is able to take that, I think that's incredibly bullish towards the gap fill. And we finally got what I would say is a very nice structure on the NASDAQ. So I think that's fantastic to see on the markets. Now, has it done what you need? No. Because have we broken this level? No. But if we do, it's signaling for the first time through this entire drop that we have real BTD price action, okay? And we have not seen real BTD price action the entirety of this drop. And I repeat, all the way from the top to the bottom, it's actually not been BTD. We did get down close enough to our trend line the other day to kind of say, okay, well, it's a bit oversold. If you wanted to scale in, you could possibly look at the position. But every time we saw pressure being put on this market from supplies, from key levels, we sold off. So remember, if this does change, then it changes the whole dynamic of this particular sell-off and could bring with it a positive August. So I think that NASDAQ's at a very key zone. Now let's move over to Bitcoin. It's it's basically just still coiling in the proper range. There's nothing wrong with that, guys. To see it coil here before the highs is fine. That is exactly what you'd actually want. The longer it coils, the better it is. When it breaches out, it's going to go ballistic. So we've seen this before. We've played this game before in terms of 80% overall, kind of just sitting there waiting for that breach. And when we get it, if we do, it's going to be very monumental. So Bitcoin's still technically bullish in terms of the daily and weekly now, I believe. But the small time frames, you could make an argument that if we rally to like 68, there could be a seller there. I'm not really too big on going negative on Bitcoin, though. We've been bullish on this now for weeks, and we want to continue to be bullish on it until proven otherwise by the price action. For the news ahead, we do still have some big news. Of course, we do have the FOMC funds rate. We've got the statement, the press conference, and then on Friday, we have the non-farm payroll employment change. So this is a big deal. This is going to be really, really key for us to look at. And of course, we need to see what's going on there. That usually creates a decent amount of volatility in the markets. If you enjoyed today's video, guys, please remember to subscribe. It's great to have you here. Check out our other stuff as well on X, etc. And if you're interested in any of our courses and how to replicate some of the trades, and there have been some amazing ones recently, then check them out as well by using that link. In terms of the general synopsis here, I guess if you're a medium to long-term player, things still look good underneath the hood. If you've been kind of freaked out by semiconductors, we've known these are going to be weak for quite a long period, at least a month and a half, and we expected this pullback. So again, I don't really think there's super negative things going on here just yet in this market. We're looking every day for those signs that yes, this Ponzi stuff will end up coming to an end, but we just don't have those reasons yet. And there's so much at stake as well politically right now that I doubt we're going to see any real problems on the market until after the elections regardless. All right, thank you so much, guys. We'll catch you for now. Bye.